Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Good morning, everyone. This is Kathy. Hello to everyone. Tomisin Cheryl Surav. If my voice, my screen sounds good, everything's coming through, please say hello. Let me know that everything is working and everything is good to go. Let me know. Just kind of editing a video right now. Just give me a second. Good morning. Hi, Nico, Daniel, trader. Where are you guys coming in from? Let me know. Are you in Europe, Asia, US? Good morning, Tom. Good morning, Joe. Good morning, everyone. Let me know where you all are coming in from. Yes, I know. Everything is working out well. Dallas, Melbourne, Western Pennsylvania. We've got some Americans, good swath of Americans here this morning. Getting ready to trade, which is wonderful. How many of you are joining us for the very first time? If you're new, let us know. Let me know that you are new so we can make sure we pay particular attention to all of you. All right, lots of Americans. On the 5 train heading downtown. Well, you must have really good reception, Chuck, because I am sure that at some point we will be cutting out during that time. Okay, so if you are new, I usually give the rundown for the trading week, and then I go through the charts. I talk about what to expect, and Boris comes in closer to the New York Open and, prepares everyone for live trading the New York Open. So it's a very rich session where you kind of get into understanding, all of the big things that could happen this week and, what's on the calendar. And then we go into how to put some of that into action through, looking for opportunities in gold, in Nasdaq, and whatever else is going to give us opportunities at the New York Open. Now, last week was a big trading week. We had some very important economic data released. This week, we have very little economic data from the U.S. this week. But that's not to say that we won't have, big movements. If you are looking at the charts, you may know that for the most part, we're starting off the trading week with U.S. stock futures down, and we are starting the trading week with the U.S. dollar lower against all of the major currencies and gold higher. So, what's driving this move? What's causing the sell-off in stocks? What's causing the sell-off on in the U.S. dollar? Anybody got a wild guess? Anybody got a wild guess on what could be causing the movements we see in the markets this morning? Yes, another mutant. That's one thing. Even though we don't have any major set U.S. data, at any point in time, we could get some crazy news. You are absolutely right. So many of you have said Moody's downgraded the U.S. on Friday, which is absolutely right. But that is not the real reason why the U.S. dollar is down. That's the easy reason for the market, for economists, for the media to point to as an excuse for why stocks are lower today, why the U.S. dollar is lower today, because, there's no news. So when you're no news, you're kind of grasping at the straws for news. And I think, and the real reason why the dollar is lower is much closer to what another mutant is saying. And, you're my VIP this morning, because Moody's is kind of the last of the bunch to cut the US's AAA rating. The US already lost its AAA rating from S&P 14 years ago, more than a decade ago. S&P said, nope, the US doesn't deserve its AAA rating. 2 years ago, Fitch said, nope, we are cutting the US's AAA rating. So Moody's announcement today is hardly Moody's announcement on Friday is hardly groundbreaking news. There's nothing new, nothing novel about this, nothing that will impact how the world feels about the creditworthiness of the US, because either they already believe the creditworthiness is crap because of everything that's happening right now, or they don't care. I think everyone's decision is pretty much already made, because with the rating itself was only a follow-up move from what other rating agencies have done already. So yes, we could say that perhaps, because there's no other things that we could point to as to why the dollar is lower, why the stocks are lower. The greatest headline to point to is Moody's. But in reality, it's what another mutant said. It's really just the back-to-back weakness in data. And this is kind of the one more sting on the back of the dollar or stocks or anyone who's really worried about the outlook for the US economy. Because at the end of the day, last week we had weaker retail sales, we had weaker inflation, and as another mutant points out, we had a weaker University of Michigan sentiment index. So we have weaker US data, period. So if there's a reason for stocks to be lower, for US dollar to be lower, it should really be consistency in the deterioration in US data. Yes, Michigan is ignored for a long time as no impact on the market, as Bernardo points out, but it's a true measure of how Americans feel. And if Americans aren't confident, they're not going to buy. And if they're not going to buy that retail sales report we had this past month, now remember, UMich is more recent than the retail sales report. UMich is for May. Retail sales was for April. So that suggests that the May retail sales report could also be weaker. And then on top of that, UMich is one of the numbers that we look at as, kind of our leading indicators for non-farm payrolls. And with UMich falling, it suggests that maybe non-farm payrolls won't be so good. So the story here is not so much whether the market cares about UMich or not. It's about what it tells us about other economic reports that could transpire. So my point is that, yes, Moody's is behind the curve. And, maybe it's certainly, I don't think this is going to happen. It's certainly a stretch to assume that this is going to put pressure on S&P and Fitch to cut the U.S. credit rating even more. I definitely don't think that that's on the table right now. They certainly want to see, how these spending bills, there's a lot of things that need to play out before they really decide to cut the U.S.'s credit rating. Remember, you can see from Moody's action that they are very, very slow, and they are very, very kind of backwards looking. So there needs to be a tremendous, Moody's in many ways is 14 years too late, right? So there's no way S&P and Fitch is going even considering or even entertaining the idea of a credit ratings downgrade beyond what they have right now, because yes, things look like they're bad, but the data has not necessarily shown that they are terrible. So that is not something that I think we need to worry about right now. So instead, what I was saying earlier is that we don't have much U.S. data this week, but the reason, the more legitimate reason for why the dollar is weak is because of the retail sales data, the inflation data, the implications that the consumer sentiment report has on the U.S. economy. But we can't ignore the Moody's. Of course, it's a little bit of a sting. It's kind of like, things are already bad. This kind of is another thing that piles on into the bad news, and another reason why the markets are not, why the recovery in the markets that we've seen from the February lows is not truly justified. So yes, we are all reading the headlines, and it is easy and to attribute Moody's downgrade to the market's movements that we are having right now, but the market is going to forget about this quickly. And it's going to focus on, these other things that some of you have mentioned, like Goriella is pointing to tariff talks that aren't progressing as much. this is going to be something that is back on the table. A little bit this week, much more so next week and the following week, because on Friday, one of the other big news is that the Trump administration said that they're going to announce the tariffs. You remember the reciprocal tariffs were delayed, and so they were in negotiations with a lot of countries, and so they are going to make, I don't want to say final, but they're going to make their decision on what these tariffs on these other countries will be in the next 2 to 3 weeks. And they have already admitted that they do not have the bandwidth to negotiate with every single country. So some of them, they'll just decide. So maybe not this week, but definitely next. But it kind of builds up, right? Towards the end of the week, much more so, we're going to be on tariff headline watch again. And so we're going to be on tariff headline watch, next week and the following week. And that could also weigh on the markets, or it could be good news. Trump has given some good, the markets liked Trump's announcement on China and on the UK. Maybe it could be good news. Regardless, tariff headline risk coming up. And that not so much this week, but much more so at the end of this week, next week, and next week certainly. And then if that doesn't happen next week, the following week. So this week will be much more about what's happening in the rest of the world, or at least it should be much more about what's happening in the rest of the world. And that really is about all of the PMI reports, all of the inflation data. If you are a part of our community, I'm going to share with you, I post, the calendar and what we're watching for. I'm going to share my screen. Give me a second. 1 second. Let me share my screen. Share screen. Entire screen. Here we go. Okay. All right. So this is not formatted the way I would like. So, but in general, US, for the US, we've got, not much, only US existing home sales. Eurozone, we've got PMIs and the IFO. And we have the CPI report and the GDP revisions. UK, we have inflation data, PMI data, retail sales data, a lot of PMIs. We have the Reserve Bank of Australia rate decision. New Zealand has CPI, retail sales. Canada also has retail sales and CPI. So a lot of data this week from the other countries. And so this makes it very, very important to pay attention, because we may have when we have opportunities where it's less about what's happening in the US dollar, we get sometimes a lot more better cross trading opportunities. So let me go ahead and share with you the RBA table. So the Reserve Bank of Australia, that's one of the biggest announcements this week. The Reserve Bank of Australia is widely expected to cut interest rates. Aussie is actually, Aussie's up very nicely today. It's not the best performer. Euro is the best performer this morning. Aussie is up. Now, looking at this table, I want you to take a wild guess. Do you think that based upon this table, the Reserve Bank of Australia should cut interest rates or not cut interest rates, or cut and then move to neutral? What is your opinion based upon this table? I want you to chime in, drop in your opinion. And Alan, yes, we'll talk about the EU-UK agreement in just a minute after we talk about Australia. Okay, so Australia, as you can see here, there are, this is a bold call, Manuel. 50 basis point rate cut is what you think this table tells you that the RBA should do. Okay, I would love to hear your reasons why on that. I think it's really interesting. Australia, the data has not really been that terrible. In general, the labor market numbers, yes, the previous numbers are a little weaker, but in general, the labor market is still really relatively firm. Wage growth is really good, and inflation is coming down, but inflation's expectations are still relatively high. There are, retail sales is up. There are weakness in the labor market, not in the labor market, in the housing market. in manufacturing and service sector activity. Now, many of you are saying neutral. So this is where this is very important for me to talk about, which is that when the data says one thing and the market or economist believes another thing in such a significant way, we have to respect the expectations of the market. You know, nearly every single economist thinks the RBA is going to cut. And they think that 3 other interest rate cuts are priced in this year, which means 4 interest rate cuts. It's really dramatic. 4 interest rate cuts is really dramatic for the RBA this year. This table does not necessarily tell us that 4 interest rate cuts is warranted. So as a trader, what should I do? First of all, as a trader, I am not going to I'm not going to think that they are not going to cut interest rates at all, because, you know, everyone else seems to think so. There's been enough deterioration, and, you know, they are certainly kind of behind the curve on interest rate cuts. Instead, what I'll be kind of preparing for, because the data hasn't been terrible, is what EFRAN says. Not necessarily a pause, but a cut followed by wishy-washy comments, where they don't necessarily signal a pause, but they don't necessarily signal an additional hike either. And if that's the case, then that is going to be positive for the Australian dollar. This is my Aussie dollar chart. Aussie, you know, is in a tight range, and it's kind of been consolidating in a tight range. You know, the rate cut decision is tonight, so it's definitely not breaking out of this range until we get the interest rate decision and the RBA statement. So depending how it goes, it's either going to be up to 66 or it's going to be back down to 62.50 for RBA. So this is definitely one of those rate decisions where I would not be trading proactively. I would definitely be trading reactively, waiting for the numbers to come out, see how it goes. But if they are neutral, if they cut and then they kind of wishy-washy, a little bit neutral, then and Aussie breaks and closes above the 200 SMA, which is the green line, then I think, you know, what you want to see a breakout, followed by a little bit of a retracement, followed by a further breakout higher in the Australian dollar. I mean, that's really what you want to see for another move higher. And I think it's possible, especially if there's no US data this week. There's nothing pushing the US dollar higher. And if the RBA does not confirm what the market thinks, which is that they will cut interest rates 3 more times this year, we could have an Aussie dollar rally. But if we're completely wrong and they cut interest rates and they confirm more needs to happen, then Aussie dollars near the upper right-hand corner of this recent range, we could certainly see a much deeper slide, not just to, you know, the 100 SMA, but probably below that to where the support level is at 62 cents. So Aussie's in play this week. I personally will not be trading Aussie dollar tonight. Well, what time is the rate decision? Yeah, it's at midnight. So I'm definitely not going to be trading the Aussie dollar tonight. But New York session tomorrow, when the New York session opens, there's going to be, in my opinion, some very clear Aussie opportunities in the New York session. And that's another very important tactic that I want to talk about, that sometimes the best opportunities for trading these news is to wait for the next trading session. And it's not like you have to wait like a next day. Just like if you have data in the Asia Trust session, wait for the European Open if you're up during European hours, or wait for the New York Open if you are not trading the European hours like me. So this is the RBA rate decision. In addition to RBA, we've got the PMIs on Thursday night. So that's going to be very important. And actually, you know, another reason why I think the RBA may be kind of wishy-washy is because business and consumer confidence have been better. And you know, the US-China trade negotiation, you know, it's like a it's not a deal. It's kind of, you know, an agreement to a truce. And so the confidence may not last, but for now, you know, I think maybe the RBA may want to wait and see. And that's another reason why I think that they could be a bit more undecided on how much further easing needs to happen. So I think there's going to be a lot of opportunity in Aussie after the rate decision tonight. Euro is the strongest currency this morning. But even so, these moving averages matter. I show you them for a reason. And I tell you they're my favorite indicator for a reason, because it is not a coincidence that Euro has stopped right at the 20 SMA. These things matter. And I say this to you at every single session because they really do. I like the 20, the 50, 100, 200, and 5 SMAs on my, and have them on my chart. So they matter. Euro is the best performing currency. And part of that is because, we had an EU-UK security and defense agreement, which, is, a pretty important step forward for, post-Brexit. It is more important in many ways to the UK than it is to the EU. But, the market is also looking for more good data from the Eurozone this week. We've actually had consistently good data from the Eurozone, industrial production, factory orders, and various other things. This week, we have the German IFO report, which probably will be better as well. And we also have the PMI reports, which will probably be better. So, sorry. So, there is the good prospect that we could have better Eurozone data. And that should lead to more strength in Euro, but this is an important resistance level. Not only is it the 20 SMA, but this is kind of like the breakout point here, right around here. So right now, this is not a buy. We need to see a close above here to buy. Otherwise, there's a because we have no news. It could just be, and German IFO is not until Thursday. It's the same day as the PMIs. So the data that we have the Eurozone is not until Thursday. We could get a little bit of retracement, which I think would be a buy on dip, and a little rally before Thursday, before it really waits to see the key data and then breaks out. Dollar yen, we have Japanese, I think with Japanese inflation data this week. We had the weaker activity index. Yen is down against pretty much all currencies except for the dollar. We know that the BOJ is in no shape to raise interest rates. This dollar yen is trading more on US dollar weakness than anything else. There is, support not far from current levels around, right here, the 20 SMA. We talked about how I think the dollar is going to continue to sell off, but there's not much going on. So, we're kind of in a range right now between 144.50 and 146. I wouldn't be surprised if we kind of just kind of move down, move up, but I do think that the move will probably be to the downside for dollar yen. Now, pound dollar, we have a lot going on this week. Pound dollar, unlike euro, broke to the upside. We have the PMIs, we have retail sales, we have inflation data, a lot going on from the UK this week. Broke to the upside, broke above the 20 SMA. We also have that EU-UK security and defense agreement, which is good for sterling. Broke to the upside. I think that it's going to continue to trickle higher. Bank of England cut interest rates recently. They are not expected to cut interest rates back to back. So there's no near-term risk of another interest rate cut. So I think that sterling will probably find its way up to 134.50. And I think there could be some interesting opportunities in other pairs, maybe pound yen, maybe even something like pound Aussie, especially if, the RBA ends up being a little bit less, if they end up being a little bit more dovish. Now, in terms of, we talked about the Australian dollar, the New Zealand dollar, we had New Zealand PSI come out last night. It was slightly weaker, but the producer price report was stronger. We still have the consumer price report, the trade balance. It's kind of hanging in no man's land. And I think that, you may be seeing a bit of a triangle formation. I'm trying to get my trend line here. A little bit of a triangle formation forming here. And Kiwi itching for a breakout. So I'll be watching for a breakout of this move here. My inclination is that, that looks like it wants to break out to the upside, but it's unclear. The data hasn't been that great. I think we just wait and see which way it breaks out. And then that should be the cleaner move for the New Zealand dollar. Dollar CAD, we also have inflation data, retail sales data, as well as Well, I think inflation data and retail sales data are the main reports. Now, with the Canadian dollar, unlike Kiwi, where it's kind of wishy-washy, I'm pretty bearish for the Canadian dollar. I think that the inflation data is going to be lower. I think that the retail sales data is going to be lower. I think that, Canada, the trade negotiations don't seem to be going as well. I think this is a bottom in the Canadian dollar. Oil prices have obviously fallen quite a bit. Now, technically, we have to respect the price action. Dollar CAD looks like it's rolling over a little bit. I would be a buyer over here because this would be a break retest, right? This would be a break retest over here at 139. So we have a break here and we hold it. That would be a really good opportunity to buy dollar CAD for a move up to 140.50. I like that a lot. And I think that that could be a really, really nice opportunity. So, that's basically, the data. The US, as I said, we have home sales, we have the S&P PMIs, and that's pretty much it. And then just keep an eye on the headlines to see if anything comes out of the headlines for the US. But otherwise, it's the market's trading more cautiously at the front of the week. We also have, a little bit of residual concerns from last week's US economic data. We do still have to keep one eye on the headlines in case anything comes out from left field. But for the time being, as I said, less of a focus on US data this week, much more a focus abroad, which I actually like a lot because that could give us some really nice trading opportunities in the crosses. And as usual, I'll be watching for my zip setups to see if, we have any opportunities. Right now, Euro is in the buy zone for zip. Dollar yen is in the sell zone, but not much momentum. We had a little bit of a gap lower on the Sunday open off of, people say it's the Moody's downgrade, but we're retracing it. So, this is one of the reasons why, BK traders, knowing when to trade and when not to trade is so important, because clearly if we traded the Asia open last night, what would we have done? Your dollar yen looked like it was very bearish. We gapped down. It opens the Asia session down. We obviously don't have the benefit of seeing this. So all we see is this. So all we see is this. It looks like it should be a sell. And if we did that, what would have been? The wrong move, because dollar yen would have popped up like 40 pips before moving lower again at the London Open. So this would have been the wrong move. And a similar case in Eurodollar, because Eurodollar, maybe not. It would be hard to tell because Eurodollar, we would have been in the buy zone here. But I guarantee you that I personally would have cut the trade because then it flashed a zip sell signal. We got the opposite signal. So the real opportunity at Sunday Open doesn't really come until the London session when we get this double zip signal. So knowing when to trade and when not to trade is very, very important. And the same is true for the New York Open. We don't trade Monday because look, what would we have done? This is zip buy zone. So we would have only bought. We wouldn't have sold. And then Eurodollar would have done nothing but retraced against us, gone the wrong way. So this comes, and my experience in zip, and we haven't had a losing month in zip since 2023, comes from a lot of trading, a lot of data. And Sunday, Mondays are not always bad for trading, but it is only 50-50, which is not the odds I'd like. And because it's 50-50, it's just not good enough. Sometimes it wins, sometimes it loses. And not winning, on a consistent basis, we might as well take that out because the losing times is a psychological hindrance. It doesn't serve us any good. It's not positive alpha. It doesn't add to any P&L. So that is why it's important to understand your trading strategies and understand when things work and when things don't work. And that is something very important to pay attention to. All right, so now open up the floor. Any questions that you may want to ask? Anything that you may want to ask of me, I am here to answer them. Otherwise, Boris will come and say hello and get us ready for live trading.
Just let you guys know, negative news on the market right now. China says that U.S. undermines consensus reached in Geneva talks, which is sort of a backtrack to their seemingly agreement. That's puts pressure on stocks. We're down about 50 points in Nasdaq just of those comments alone. So see if there has any follow through.
It's kind of really interesting because I guess we're getting a little bit of movement in dollar yen.
Yeah.
No movement in euro at all. Let's look at Aussie, which is proxy for Asia. Aussie's up. So the market doesn't, I guess Trump, this is actually 6 hours ago, so it's not really that relevant. I guess the market maybe hasn't caught on to it yet. This is the headline Boris talking about. It's only a minute ago. U.S. undermines consensus reached in Geneva talks.
Yeah, I mean, it's just diplomatic talk, so I don't know if it's means anything. But the market is already under a lot of pressure today, where we're down like almost 300 points in Nasdaq at one point. So we'll see if it has any more pressure on the move here. So any questions for Kay, guys? How's everybody doing?
So the only thing I want to add to that is, when you have a day of bad news and more bad news comes in, let's say in the dollar, it usually has a bigger impact than if it was good news, if you think about it, right? Because there's a current residing sentiment in the markets, and whatever headline coming out is reinforcing the existing sentiment. So, perhaps we could have some follow through in the New York session because of that.
Agreed. That, generally, negative headline against negative price action helps to push prices lower.
Mm-hmm.
So that's the way we're going to be trading today across the spectrum. Okay, everybody good?
All right. Before we get into live trading, let us know what you're trading this morning. Are you trading gold, indices, or what you are interested in trading? Because you may be trading nothing right now. What do you want to hear about? Gold, indices, Nasdaq, ES.
We're going to trade Nasdaq and gold, both long and short. I am going to show you. This is the beauty of having multiple accounts with Apex. And having we're actually going to trade both wealth charts and trading view today, just for fun and giggles. We're going to trade gold on wealth charts, and we're going to trade Nasdaq on trading view. And I'm going to show you the way we're going to do this. Let me change my.
Boris, if you don't mind me asking, what's the difference?
What's the difference between what?
Yeah, I mean, wealth charts and trading view. I'm sure.
Oh yeah, well, we're going to get into that. I mean, there's a lot of differences in the two trading platforms. The most obvious difference is that with wealth charts, you can actually place trades directly on the platform. Whereas with trading view, you have to integrate that with Trade Evade. It's a lot more complicated. You have the extra step. But that step, by the way, if you want to join our community for free, there is a day trading course that's totally free to you guys. And within that day trading course, I go and I show you exactly how to integrate trading view with Trade Evade. Not too difficult, but requires a little bit of a step. But with of course wealth charts, it's super easy. You have the trading built into the execution platform built into the charts, so I could literally trade it. More importantly, with wealth charts, I could literally trade two separate accounts on the same browser. Whereas in TradingView, you'll see I have to switch around between the 79 and the 78 accounts, which is what I'm trading right now. So there are different. There are definitely a little bit of differences. Our indicator works on both TradingView charts and wealth charts. And if you'd like to get that, I'm putting together the link here for you guys that you can click to. This will give you 6 months access to everything we do, including coaching, including Kathy's signals, including everything. It's really the best deal. And I'll buy you 3 free prop accounts. I'll buy you 3 50K prop accounts if you do this deal. So a really, really good deal. I'll leave that up there for you guys to take advantage of it if you want to. But what I want to talk about today, what is this thing on here? I don't know what's going on over here. Oh, it's just the cross marks. I'm going to explain to you exactly what I've been doing, which I think will be very, very useful to all of you guys trying to trade the way I do. There's, trying to trade sort of the scalp way, because this opens up incredible flexibility for us to be able to trade both long and short in multiple assets without exposing ourselves to any significant risk, because we're going to essentially, what's the word I'm looking for? separate, whatever. I forgot the word that I'm looking for. We're going to separate our trades, and that will eliminate the possibility of cross trades contaminating risk in the account. Let me explain to you exactly what I mean and how I want to do this. So first, let's take a look at Nasdaq. Right, we have 10 minutes to go to the market open. We're just going to look at the Nasdaq chart straight up, nothing complicated. I have used my BFF indicator in its purest form. All we're trading is the green dots, red dots. The one thing I've done, which is for those of you who are interested in doing this to kind of really clean up the indicator, is if you go into style, I've literally turned off all of the diamonds on the charts. So the chart is only going to have moving averages and dots. I've unclicked this. When you go into style, I've unclicked this. I've done the similar thing in wealth charts, where you click on here and you go into style, you just unclick everything, triangles, diamonds, everything. You unclick everything, make it white instead of blue, and that will basically clean up the chart to no other symbols but just the dots. The reason why is because what we do here, as far as momentum trading and scalp trading, is we trade the green dots and the red dots all day long. And all we really need for a signal is 2 consecutive green dots, the last one being higher than the prior one. So if we get a green dot over here that is higher than this green dot, that will be a buy signal for us. If we get a red dot that's lower than the prior red dot, like over here, that actually would have been a sell signal. And the reason why we do this so frequently and so consistently is because we're looking for incredibly small momentum movements. In Nasdaq, we're looking for just a 5-point move off of that 2 dot signal with a 20-point stop, and in gold, we're looking for a $1 move with a $4 stop off those 2 dot signals. Now, what's happening right now is I actually took the counter trend signal, the green dot signal to the upside, and earlier I took the red dot signals to the downside. The thing that I kind of want to explain to you is that what I've done is I've taken an account that is only long only. So in this particular case, the Apex 73 is just taking the green dot signals, and the Apex 86 is only taking the red dot signals. It doesn't matter whether they are trend or counter trend. I haven't segregated them that much. I guess that's the word I was looking for, segregation. We segregate risk into 2 separate buckets. What this allows you to do is 2 things. Some people have asked me, well, what happens sometimes if you're in a green dot trade and you get actually a 2 red dot signal? You can't flip around. Well, having 2 accounts, one long, one short, absolutely allows you to do exactly that, to flip around and do that. One other thing that I've done here in my setup, for those of you who have the indicator, is I've gone into I've set this into counter trend mode. The main reason I set this into the counter trend mode is because I'm kind of interested occasionally in taking the yellow candle counter trend signals. Now, when am I interested in taking those signals? Only when I have the second one. I never take the first yellow one, even though this one particularly may work. I always take the second one, because when it comes to counter trend, the first one is usually a false signal. The second one is usually a true signal. Regardless of what we're doing right now, as far as just signals, what I'm most focused on in gold is I'm looking for the second green dot. If I get a second green dot, great. It's a $1.17 on the clock here. I can get a little bit larger here. You can see it just a little bit larger on this. Move this over here. Move this one a little larger. You can see that. And I'm watching this to see if I have a signal on this thing. One of the little things that I've done here, by the way, is, I don't know if you can see it. I probably can't see it over here. On my iWatch, I literally put like a 35-second timer at around a minute to go, and this buzzes me usually 20 to 30 seconds before the candle closes, so that I can come back to the candle and see if I want to, if there's a trade setting up or not. In the meantime, on Nasdaq, same idea. I have 2 separate accounts, one that takes green dots only and one that takes red dots only. And that is very, very helpful as far as first of all, the ability to segregate risk. See, my thing is just buzzing right now, so I can go look to see if there's a green dot signal. It looks like there's no chance of a green dot signal, so there's no trade in gold for the next 2 minutes. So we can turn our attention to NAS and see how that's going on. I actually, I got to do one thing. I totally forgot. I've been watching these trades. I need to make sure that we're streaming okay here. And oops, I got to mute myself. Is there a delay in wealth charts, or is it current data? Trading view is needed to pay. Sorry. Okay. So there's a lot of misunderstanding there, Mark. Let's take this one step at a time. Everything. If you buy an Apex account, either with TradeOvate or TradingView. So here's my Apex link. Make sure you use it. This is exactly why you want to do this. By the way, we're watching NAS. I have 2 green dots, one higher than the other. I'm setting up my watch right now. It's about 1:12. I'm going to wait a little bit. Usually when it crosses about the 1 minute mark, I'll put a 35-second buzzer on it. So all data is real. All data is current without you paying $1. That's the beauty of having a Apex prop account. You get to have real market data for no price. Okay, regardless of whether you're in Apex or wealth charts, this is all current data. Okay. Okay. So 26 seconds left on this. Somebody's saying to me, this is 2 minutes before the open. They're absolutely right. But you know what? We don't care. We're going to have fun. We're going to trade, I think let's trade the 78 account to the long side. Yeah, 78 account to the long side. If this holds long, this has got to hold long. I got 4 or 5 seconds. I got nothing going on here. 2, 1, buy. Okay, buy. Shit. I'm late. God damn it. Fuck me. I'm late because I was not paying attention. All right, let me see if I can get out of this trade. Nah, fuck it. That would have been a trade if I was just paying attention. Sorry, guys. Fuck me. Come on, move. Fuck. Sorry, I mistimed the trade. And now it's going against me. All right, whatever. I'll have to hang in the trade. I don't like being in the trade, 1 second before the market opens. All right, you know what? I'm just going to get the fuck out. All right, I'm out of the trade. I don't give a shit if it makes money or not. It's 9:30 in the morning. It's really a stupid time to be in the trade. I should have been here. Had I gone long here, I would have made the money. But I was paying it. I was just not paying attention to the trade. It's okay. We got a million trades to go. Okay. Yeah, so that's the answer, Mark. That's the answer. So the most important part is Apex is the way to do this. It's dirt cheap. Go out there, get a whole bunch of accounts, or if you don't want to get accounts, I'll buy you accounts if you come join us. And you'll start out with 3 accounts. You just have to get 1 more account. If you want to do gold and Nasdaq, or you can just simply do Nasdaq long, Nasdaq short, 2 account sizes, and you'll be fine. I mean, these accounts I started on Friday. This one is 614. The other one is 617. You see me just running on, and boom, boom, boom. Market open, blast us higher. We're gonna give this like 5 minutes before we do anything, either in gold or in Nasdaq. Now with gold, here's what's interesting about gold. Gold, for us, the next potential trade would be a red dot. Would be a sell condition. The sell condition is on my 86 account. The buy condition is on my 73 account. Similarly, you see sort of the same story with with wealth charts where I'm kind of building it slowly. The accounts are almost at 51,000, right? So okay, so I'm getting actually a red dot on gold. We will put my 35 seconds on right now. No, we'll just watch this because we're not going to trade Nasdaq anyways. If this red dot holds, if the momentum to the downside holds, we'll sell it. If it doesn't, there's no trade. $42 seconds left. Now, the cool thing about like kind of trading this way is that I'm just turning off my alarm. Is that you're obviously going to get stopped out, but the stop out is relatively small. You have a $2,500 budget. Your stop out is only $400. And the other side, usually if you get stopped out on one side because somehow you missed the trade or just momentum didn't happen, the other side is going to go. So you're always balancing. One account is almost always going to be net positive. In a perfect world, you have both accounts to be super net positive. But as I said, the game here is to get to the finish line. And to get to the finish line, you want to give yourself as many chances as possible. All right, so gold kind of reverses. We have no interest in gold now, even if this is a green. Excuse me. Even if this is a green dot, because we need 2 green dots consecutively. If this turns into a red dot, if this really sells hard below the 31 level, yeah, then we'll get interested. But it's $1.26 on the clock. Let's take a look what Nasdaq is doing. Nasdaq is soaring. I'm going to, as I said, I'm going to wait for the first 5 minutes of NAS, so no signals here. But had we stayed in that trade, that would have been an easy trade for us to do. For all the hand wringing, the first 15 minutes looks like it's going to be a strong open, but you never know. We've seen this, pop and then drop like a stone as a true move happens for like a half an hour. And what we're looking for is that true move. When we have that 5, 6, 7, 8 consecutive red dots, that's where we have 3, 4 high probability, really juicy trend-based trades. Okay, in the meantime, 42 seconds left on gold, second red dot, looking to short it. I have 2 gold charts on the screen, correct. That's exactly the point. One is for the long signals, one is for the short signals. That's how you do it on wealth charts, because you see this is one account that just takes only green dots. This one is taking red dots. So I'm waiting here 18 seconds. It's a big drop in gold, by the way. Look at this. Big vol candle, 11, 12 seconds. I'm waiting until the candle closes before I initiate a short trade. I have 2 red dots. One marginally lower than the other, big move to the downside. Sell. All right, I'm a little bit late on the sell. Sorry, just late today because I'm not focusing on not focusing my execution here. But meantime, let me switch over to NAS and see what's going on over there. So NAS is building up a green dot as well, which if this stays green, we're going to go long on the NAS account. $1.30 on this one, so we'll come back to it in a minute. Let's see what gold is doing. Gold is doing nothing. It had a big sell-off and it may retrace on us. We'll see where it goes. $1.17. Around 30 seconds into this candle, I'm going to switch over to Nasdaq and see if it's still giving me a buy signal. Let's see what Nasdaq is doing. No buy signal, but we're going to watch this to see if this holds. No buy signal on Nasdaq. So no, well, 25 seconds left, still a long time to go. So on TradeAway's side, we have 1, 2, 3 funded accounts, and then 2 more to be funded. Oh, shoot. All right, let me get long. God damn it. Bye. All right, bye. Come on. And we're done. I was a little bit late on that. So that got done. What is my Nasdaq? The gold is still flipping around. So we'll come back to the gold, see if it wants to do anything. Sorry. The biggest aspect of kind of, running this, and this is why it obviously helps, I generally, let me explain to you what I do. I only trade one instrument. I trade Nasdaq. I trade both sides, one screen. It's super easy for me to switch around. This is from, in the morning I was around 50, 30 or 300 on both accounts. Now I'm at 700. So I'm about 700 on Nasdaq. With you guys, I'm trading both gold and Nasdaq because you guys want, signals on both sides, which is perfectly fine. But you can see how, unless you're fully 100% focused, and you have, and I would probably have traded this with 4 screens on, it's difficult. Scalping is the art of timing. You snooze, you lose. That's the one drawback of what I do. But it creates lots of trade opportunities, and it also creates lots of trade ideas for you, because you don't necessarily have to do what I do. As I said, you can take the first dot and try to run it for 20, 30, 40 points, which is perfectly fine. And I show you how to do that in my coaching sessions, all of which, of course, are available if you guys want to hit that link. If you want to hit the Wealth 65 link, you'll get coaching and everything else organized. But that's the key thing. To succeed here, it's really not hard if you devote the time and the focus. 1 hour, one instrument, both sides, focus out, and you should be okay. Oh, look, we got done on the gold while we were talking, so that's good. So the gold trade also got done. Now there's nothing much to do, because even if we get a green dot, we need a second green dot. Remember, a trend is a line, and a line is 2 points, right? Basic Euclidean geometry. And more importantly, a rising line has to have higher highs. A falling line has to have lower lows. That's it. Just basic Euclidean geometry, momentum, and Newtonian physics. Object in motion tends to go in motion. That's all we're trading. We are trading pure price action in its rawest, simplest, purest form, with a very clean, very, very effective indicator. And we are segregating our risk into longs and shorts to give us even more opportunities to, to complete our mission. As I said, it's sort of in the perfect world, you sometimes can have as many as 10 trade opportunities in an hour, $100 an hour. If every opportunity completes, you make $1,000. That's obviously nowhere near reality. Reality is probably going to make $200 or $300 an hour, but a couple of hours, that's $600. 5 days, you're funded. 5 more days after that, you're at payout territory. I don't know any other strategy or structure that can take you from a $25 or $30 account to a $1,000 payout in a month on one account. And obviously, you do that across 5 or 6 accounts, you can get much better, much bigger potential payout structures. So I thought it was really, really cool. Any questions here, guys? Everybody follow me on clear and crystal things. I am, if I was only trading Nasdaq, here's how let me show you where we're at on these trades. What would I have done in a perfect world. So I'm long here, I sell here. This was right. I'm long here, I sell here. I should have been long here. I kind of gave up this trade. I should have been long here. I missed an extra trade because I'm talking and I'm just not paying attention. But generally, it's not so bad. I thought I missed more opportunities, but I really only missed one opportunity and I didn't convert fully. So I'm up like 150. I should be up about $300 over the last 30, 40 minutes. Now think about that, powerfully, $300 to $500 in an hour in a very, very simple, clean fashion, The stops and targets are 520 on Nasdaq, 1.4 on gold. Very negative risk reward ratio because we're trading very high probability trades where we're looking to win 9 out of 10 times. This is small, high caliber sniper timing trades. That's why timing is crucial. You have to wait for the candle close. You got to press the button, and you want those trades resolved quickly. If you want less accuracy, bigger trades, less need for timing, then you can just simply trade a lot of the strategies that are embedded into this indicator, all of which are in my free course, and all of which I explain in my coaching to their full extent. So, if you want to join the free part of it, I just put the link in there. Who's like, I'm going to do this is what I want. You're new. Nice to see you, Max. First of all, everybody who's new, Max from the UK is new. I want to see 10 people tell me that they're new out here. And the 10th person will get something special. I'm not going to tell you what because I haven't figured out yet what I'm going to give you. But actually, you know what I'm going to give you? The 10th person, I want 10 people to tell me that they're new here. And if you do that, I'm going to give you a month's free access to the BFF indicator. Andrew, all the UK people. Who's wait? Shit. I know this is horrible, guys, because I literally watched all the highlights, but I still don't know the name. Is it Palace? Shit. Something Palace won the FA Cup. Henderson, who did the great save. I saw the save in slow-mo. Is it Chelsea? What's the name of the club that just won that beat Man United? Shiksa, nice, or Chica, nice to see you. Chifa says he's not new, but most days he feels like one. Okay. Crystal Palace, right. I've never seen grown men cry in my life, as I saw that. Who's happy that Crystal Palace won the FA Cup? Although, man, Haaland, did he screw up that follow-up on the penalty? Man, that was pathetic. There were two things this weekend that I found very amusing. One was the Crystal Palace win, which was really awesome. And just, like I used to be a goalie, so the save was just really exciting, even though he clearly was off the line. I mean, please, homie, please, as we say, he was clearly off the line. There should have been a redo, but whatever. They didn't deserve, if they couldn't put a penalty in the net, they didn't deserve to win. And the second thing is, okay, I was cheesy enough to actually, I didn't watch it, but I watched all the clips around it. Who watched the Eurovision contest? And tell me who does not love the Espresso Macchiato song by Tommy Cash, which is just the cheesiest song ever. It's becoming such a huge hit on TikTok. Who saw that? That's actually should be our anthem because nobody drinks more espresso than I do, right? So, let me, I want to change myself. Let's see if what is this? Is the one I want? Okay, that's fine. If I'm sitting like this, you guys are fine, right? Who heard that song? Anybody heard that song? It was hilarious, the Espresso Macchiato song. Okay, sorry, guys. my bad. I took my eye off the ball. We had a green trade in gold. Now we don't, because the trade was here. Double green dots could have been here. Trade was already done. Trade is done. We don't chase it. We wait for the next opportunity. Maybe another 5 minutes, then maybe another opportunity. We don't chase it. We'll leave it alone. I had a poll question I wanted to ask everybody. Now I totally forgot. So that's only it. That's only 3 people who are new. I want to see more newbies. I'm on a 2-minute time frame. This is a 2-minute time frame. Unfortunately, missed this opportunity. We got to let it go. The trade is, we made the trade here. It TP'd here. We now have to look for the next green dot signal. So until we get a green dot signal, we're not trading. On the Nasdaq side, I got nothing right now. So we will wait. If you want to join us, this is the free link for the free day trading course and Kathy's free Forex course. So feel free to join me there. Free. So the great thing about this, as you guys see, is one, I'm really not, by trading both sides of the market, you are a true trader. What I mean by that is you are not biasing yourself with being long or short. You don't have a what's the term? Skin in the game. You the ultimate best way not having skin in the game. You have money in the game, but you don't have skin. Your opinion. You don't have your opinion in the game. When you don't have your opinion in the game, it's the best thing possible. Oops. No, sorry guys. I'm yapping. I missed this trade. Sorry. Fuck this. I can't chase it. This turned positive at literally the last second. I should have been watching this, so I missed the trade. I'm going to be missing trades all the time because I'm trading both instruments for you guys. It doesn't matter. You guys, you've already seen 5-6 positive trades out of me today, out of possible 10 positive trades. That's just the nature of the beast in terms of how things go. If I'm trying to talk and trade at the same time. If you want me to be amusing, then I'm going to miss trades. If you want me just to trade like a robot and not say a word, it'll be so fucking boring. You'll kill yourself. It's not the point. The point is for you guys to understand the sequence of actions over and over and over again and see how that sequence of actions executes itself, and then then go from there. All right, I got 2 red ones. I'm watching gold on the short side. 48 seconds on the clock. I'm actually going to pay attention. And of course, it's going to disappear on me the moment I pay attention. All right, it's fine. You see how the candle, the red dot is moving around? If it goes away, we have no trade. 12 seconds left on the clock. 10 seconds. If the red dot stays, we short. If it doesn't, we leave it alone. 3, 2, 1, sell. All right, we short the red dot. We're looking for that $1 move. Almost there, almost there, almost there. Not quite. Not quite. All right. We'll leave it alone. Oh, you know what? I'm going to we got done. All right, good. We got done on that. Another good trade. $300. Look at this. $300 and $100, $400 without me even paying any attention to gold. just by following, the long short format. Probably another $300 that I missed in Nasdaq because I'm putzing around with you guys. And we've only been like online. Well, today we're a little bit early, right? So it's 9:15. We've only been online for less than 45 minutes. You can see it piles up. It really, really piles up if you're just doing a good job, just focusing on structure, just focusing on scalping. I'm actually tempted to do a video that I wanted to title "Action Talks, Bullshit Walks." It's like anybody ever heard that expression? It's a very New York expression. Anybody ever heard that? It's a very American New York expression. No? Raise your hand. Give me a thumbs up if you've ever heard that expression. Action talks, bullshit walks. The reason why I kind of thought that was very appropriate is because that's a sort of a very New York saying you can promise me anything, but the only thing that matters money talks, bullshit walks. Right, exactly. Money talks, bullshit walks. But I kind of modified it to action talks, bullshit walks. Because what it means is that it doesn't matter what you say, it only matters what you do. Now, where that's really, really irrelevant in scalping is the ultimate price action strategy. It's the ultimate strategy of do what is happening in the market, not what you think should be happening, right? I think the market should be crashing because tariffs and Chinese and the Moody's downgrade. In the meantime, the market just soars. Or the opposite. I think the market should be soaring because there's such great news and the market is falling like a stone. Scalping, because of its emphasis on price action, puts you exactly into where you want to be. It's on the action side, not on the bullshit side. Yeah. Gentler version is action speaks louder than words. Yeah, I think that's good. Sweetwater, as always, ever the diplomat, mutes my vulgarity into the right format. I think Sweetwater. I think we need to send you to the Middle East. I think we're going to put you as I think you're much better than Witkoff. I think we need to put you in between Hamas and Netanyahu. Maybe you'll actually negotiate a deal because you have the art for diplomatic language. What do you say, guys? Should we vote Sweetwater as the new Middle East envoy? I'm voting for him. Anyways, yes, I mean that's the whole idea, and that's why I love scalping, because scalping is essentially the ultimate price action strategy. And of course, the way I scalp, which is super focused and truly in the zone for that 1 or 2 minutes, that's happening, absolutely puts you as close as possible to the heartbeat of the market and let you follow the heartbeat of the market. You see right now, we're a little bit consolidating. There's nothing much going on. There's no signals. No highs being made, no lows being made, nothing, no trades, which is exactly what we want to be. We want to be in that no trade zone because there's nothing going on over here. Same with gold. Gold's doing nothing. It's all consolidated. Gold had its runs. We took its runs, and then we just, going to leave them alone. Is all the thumbs up and yeses as Tony. Did you is that the eval account? Where is this? I just saw Tony's comment. Tony, is that an eval account? Did you just bank it out of Qatar? Tony is in Qatar right now. Is that right? Just knocked it out? Remember, if that's your eval, don't do any more trades. Freeze it. Because once you're over 53, if you do any more trades, you're going to give it back. So just freeze it. Nice job. All right, everybody give a clap to Tony for basically passing the eval. So now he's getting another funded account, which is great. Awesome. Good for you on the gold trades. That's really what we do. That's what I love doing this, because the whole idea here is to help you guys pass the prop test, get involved, have a good time, fund accounts. Actually, I got to tell you one other thing. So there's one other thing that a lot of you guys who trade with me in Asia and everywhere else, you're getting all this love here. Gina's giving you love, Nico giving you love, David, everybody doing a good job. Yeah, I think we deserve. Hold on, Tony. Let me see if I can do this. Everybody who passes their eval during my lives, I'm going to do this for you guys. Hang on, let me find it. There you go. You get the money rain. Tony gets the money rain. Nice job. Here comes the rain. It's raining money. Good for you guys. Anyways, point being is I wanted to just kind of tell you that that's really what we try to do. And my approach of like running 4 accounts. I mean, honestly, to be honest with you, in real life, I only run 2 accounts. I'll run the gold with you guys when I'm trading live, but I'm not. It's just I find, at least for me, I can only focus on one asset, both sides of the market, a couple of hours a day. I'm good to go. If I diffuse my attention span, I tend to underperform, and I don't need to, because look at this. This was started on Friday. This one is 57. The other one is 56. I'm not even through the rest of the day. I could easily maybe run this to 51,000 in very, very clean, very risk controlled fashion, which is exactly where I want to be. But here's what I want to say to you. I forgot to kind of say to you. There are lifetime people who have not gotten access to wealth charts, and it's on me because, guys, I've just been super busy doing some other stuff. So anybody who's lifetime, who you have to have a wealth charts account. Don't waste my time. Please don't waste my time. If you haven't opened up a wealth charts account, go buy yourself an Apex wealth charts account. If you've done that, email me if you're a lifetime member, and I will try to get it all enabled by the end of the day today. And then everybody else who is trading CFDs, which we're going to talk about on Tuesday night, Wednesday night, tonight. I have the one of the things that I've been busy with is I have completely replicated this dots indicator exactly how it looks on TradingView into MetaTrader 5 and mostly into MetaTrader 4. MetaTrader 4 is almost like the same way, but MetaTrader 5 exactly the way it looks on TradingView. And the coolest part is, yes, you can trade this on your CFDs exact same way, both sides. Or I actually traded on my live futures account. I had a great last Friday. I think I made like $400 in a matter of half an hour trading Nasdaq this way. So super useful. I'm happy to to do the MetaTrader 5 for all of those guys that have 8-cap accounts. Or for anybody who's lifetime who wants to trade futures on MetaTrader 5, so it's useful. But you already have if you have the wealth charts, you're all set. So that's it. Do I need 7 trading days? I'm sorry. What do you mean by 7 trading days? To get funded, to get paid out funded? No, I was talking about, you said you passed. This was the eval account that you passed. If you pass the eval account, you can do it in one day. That's the beauty of Apex. That's the reason why I want all of you guys to go out there and get some Apex accounts. It's 5 years says only for funded. No. You can literally get funded in one day on the evals. That's what's so cool about it. So go out there, go get some Apex accounts. It's tomorrow. Their whole sale is going to go away. Just buy 5 or 6 of them. I'm telling you, you won't be disappointed on this. Oh, we're getting a green dot. Maybe. Let's see. Do I have one last pop on this? I will come back to this before the candle close. I promise you. I just want to see what gold is doing. Gold is doing nothing. So let's focus on Nasdaq. Let's see if I can get another Nasdaq trade here. Maybe not. Maybe not. Am I still doing the raffle? Not today. We're gonna do the raffle tomorrow, guys. We'll be doing a raffle tomorrow because I want to organize it a little bit. Hey, wow, Gallivan. Okay, so many people getting the money tree. Gallivan, you're getting the money tree. Here we go. Here we go. You really deserve it. Hold on a second. I think that's awesome. I mean, this is the key. And this is what people don't understand is there is no better training for trading than prop. And yes, sometimes it make you, take you a really, really long time. And sometimes you're going to blow 10,000 accounts before you kind of get comfortable. I try to help you. Oops, shit. Every time I try and do inspirational talk, there's a setup going on over here. It's very hard to do that. So let's focus on this. Buy market. I got 13 seconds left. We are looking to get long this trade if it stays green. 3, 2, 1. Shit! I went long twice. All right, I'm gonna get out. All right, I went double the account, so I want to truncate my risk a little bit here. And it still would have TP'd me. I'm sorry, guys. Again, the thing about my trading, you can see on the chart. This easily would have. For those of you guys who took the trade, you did a great job. I'm sure it TP'd for you. Anyways, Gallivan, good job on that. Good job on making money. I just double clicked on this thing. That's another aspect of TradingView, Tradeovate that is not present in wealth charts. In wealth charts, you're never going to get that problem. Wealth charts will be a single click structure always. I got a double red in gold over here, 54 seconds. So this is the short account. We're gonna see if we can make that happen here. I'm waiting patiently for this candle to close. $27, 28 seconds left. All right, short on gold. Yes. So Fabio is actually making some really good points. So he's saying he's unfunded. He's using 2 micros in 1 mini after 1 loss, but he got 2 losses in a row on gold. And he says that if he had segregation, that would have avoided the second loss in a row. Yes, that's really, really key. Can we use wealth charts on TradeZilla? You mean, can you upload the data for TradeZilla integration? I believe so. oh shit, I wasn't paying attention to gold. Gold looks like it. You know what? I'm going to flatten out on my gold. I'm going to flatten out my gold because I'm not paying attention. That almost hit my target. So it's just, I don't really trade gold that much. But actually, looks like gold would have been done anyways. So we're done on gold anyways. I'm done with gold trades. Go back to my favorite Nasdaq. Yeah, gold done. Miguel says gold is done. Good job. But yes, Fabio, and we'll talk about how to run funded accounts in coaching, because I'm running this. This is pre-funded accounts. This is eval accounts. So obviously, my risk tolerance is much greater because I really don't give a shit. As I told you, the key thing to eval accounts is to get to target. You don't really give a shit about whether you blow it or not. You blow it, you buy another one, you get to target. The whole function of the eval account is, well, there's two. If you're brand new, the eval account is a great practice account. But if you've done this 1,000 times, the only function is just to get to target. So, you don't really care about risk. But when you get to funded, it's a different story. And so we'll talk about that in coaching this Thursday. Those of you guys who want my coaching and everything else, here's the link for the last time to get everything under one roof. Here it is. I'm putting it up here on the move. Oops. So one last blast. Nas really sorting. 51 seconds left. I'm going to focus on this. Let's see if we can take the trade here, if it stays. $36 seconds left. Close is 88 and the high was 4. Yeah. That's correct. Nico is saying if you blow up an eval account and you cancel immediately, you don't have to pay the next period. That's correct. And that's something you could buy. You could cancel, just buy a new one. Or a lot of people like to do the reset. It's not much of a like when it's an 80% discount. Then we're done. Nice, we're done on the pop. We're at 847. So guys, what do we start today? I think I started at 500. I took this. Look, this one is 847. I don't think I did any shorts. Did I do any shorts? Maybe I did some shorts. I don't remember. Literally, I think I did $700 with you guys just fucking around today. I could have done more than 1,000 in no time, right? Because we started at 500. This is 847. The other ones with wealth charts, you can literally see, because my daily P&L is right here, which is 96 to 345. That's 445 against 3. Yeah, it's about $800 today on trading. Very, very simple. So literally, I think I've basically pared this down to its purest, simplest format, which is trading dots, segregating the accounts, segregating the assets. This way, you're focusing strictly on, and my personal suggestion or recommendation, depending on how you trade, is you choose one asset, you trade both sides, you do it for a couple of hours, you're going to feel good. If you got more than a couple of hours to burn and you really want to, run 4 or 5 hours in a screen time, you have a really, really strong chance to run it. Maybe have $1,000, $1,500 a day doing it. But however you want to do it, this is sort of best practices advice, and then then you're good to go on all of this. So I'm going to close my Wells charts for now. We will. Oops, hang on a second. Let me save it. Save my layouts, and then I can close it out. TradingView is there. And I like this approach where you guys can see, of course, all of my trades. You can see all of the entries. You can see all of the exits on both platforms. Full transparency. Have fun. Bring all your friends. Everybody who's a newbie, who has friends who are interested in trading. I hope you guys like this, because I don't think anybody else does this, where we literally trade every 5 minutes in real market time. No bullshit, right? Nobody, there's no place to hide here. So if you really want to learn how to trade effectively, this is the best place, in my opinion, to be, right? I don't brag about my Lambos. I don't brag about how much money I make. I don't brag about any bullshit. We're just focused on trading. Action talks, bullshit walks. That's the motto of this room. So if everybody's interested, here's my last time for my. Oh, by the way, it's a siren. It's not. This is the first siren of the day, but we almost went a whole session without a siren, but we did hit the siren. Yeah, my NQ trade got done. Apex doesn't care. No, you could cancel and restart. I've never had any problem with them on that. I'm happy to ask them, but no. I mean, they just they're very, very. The thing I like about Apex is they're very, very relaxed about opening rules, trading rules. But when you get to the payout stage, they really want you to stay controlled. Stay controlled, and that's the key. All right. I want to thank you guys. Another good session, a lot of fun. Hope you guys like the segregation technique. It's definitely a lot easier for everybody to manage stuff. What are the new ones? What of us the new ones? I only saw 3. So I'm going to wait till tomorrow, Chica, I want 10 people to tell me their new ones. Then I will, then we'll do a little bit of raffle. Maybe we'll do a separate raffle for the new ones. I'll give you guys access to the indicator for a month, and that'll be fun. All right, guys. I'll see everybody. Tomorrow. Everybody enjoy, and of course tomorrow night. As I said, those of you guys who are on the CFD front, I have the full BFF on MT5 now. It's really cool. You can trade it on on your personal accounts as well as on the prop ones. Thank you again. Miguel, was that fun? Did you like the segregation? Did you like the separation of longs and shorts for the risk? I think that really makes a lot of sense. It makes perfect sense with Apex. Let me give you one last time for the Apex accounts. Go out there, get a couple more accounts before they lock it down. And look, after a long uptrend, we're finally getting a little bit of sell-off. And here's what we're going to look at. When I go offline, one of the things I'm going to be looking at is, am I going to get a couple of red dots? If then the short trade, the short account is going to come into play, and we get a chance to trade the short side. So that's the beautiful thing. We can trade both sides without too much work. What about Trump peace deal? I don't think there's any Trump. Is there news on Trump peace deal? I haven't heard anything. But if it happens, it'd be very bullish. But so far, I haven't heard anything. But it's only Monday, right? That's like a lifetime in Trump land. Okay, my friends. Everybody have a great day. I see everybody tomorrow. We did a whole thing in a nice, clean fashion. Hopefully, we can bank a little bit more P&L. Everybody enjoy. Bye bye.